I would also like to predict that the Chinese investment activities overseas will accelerate after this pandemic effect is diminished.
We believe that where is risk, there is an opportunity, that we will find our way to handle it.
So I would expect to see a sort of reorientation of where China's looking at investing for the longer term, and definitely a focus on those strategic minerals and the battery minerals as well.
We are in a good shape to have to follow the concept of the same destiny of the same group. We chosen for the best economic and political return for all the people related, we call stakeholder.
Hello, and welcome to another one-to-one Mining Investment APAC online content session. Today, looking at the outlook for China outbound investment, we have Greg Pan, President and CEO of Pengxin Industrial Group. We have Jiawen Hou, Investment Manager of Pengxin International. We've got George Fang, Executive Vice Chairman of Huayou Cobalt. And we have Clyde Russell, Asia Commodities and Energy columnist at Thomson Reuters. So thank you everyone for joining in today.
Thank you, Amy.
And so I guess to kick things off, where the global economy has started to recover slightly from the COVID pandemic, and China is certainly in, a little bit more of a better place than the rest of us, having kind of started to come out of it much sooner. What's the current outbound investment appetite? George, if you want to kick us off, maybe you can tell us a little bit about you and your role at your new company, and maybe what you guys are looking at.
Thank you. So this is George Fang from Huayou Cobalt. It's a great opportunity for me to have this dialogue to talk about my understanding about your question. Also, I'll make a brief introduction of Huayou Cobalt. Brief, how much brief? Just one sentence. Huayou Cobalt is a domestic company based in Zhejiang province and Pengxin city. So our major business is investment, research and development, and production of cobalt and EV materials. So we are a high-tech company. So we are in the supply chain of EV in the EV industry. That's a Huayou Cobalt. So actually it's a EV material and high-tech company. So in terms of the question you raised, what's the current outbound investment appetite? To my personal view, nowadays it's still quite strong. Nowadays in China, we talk about two cycles, both domestic cycle and outbound cycle. Actually, it's correlated. And to some extent, it's the same destiny within the two cycles. Why think about that way? We got three reasons and three observations. So first reason and observation is what we see in 2020. Because of the influence of COVID-19, we see this world is different with what we see in 2019, even at 2018. But even in that kind of a situation, last year, Chinese outbound investment still have 132.9 billion USD. It's still 3.3% increase than the year before. That's 2019. So in that case, so that's why we say Chinese outbound investment still strong. In the 2021, this year, we see, as you mentioned, Amy, the economic situation will be getting better and better. We see the recovery is coming soon. And also the COVID-19 situation because of vaccine getting popular and popular, we hope the situation, the life, the people's life, and also the economy will be getting better. Depends on when and how, but anyway, it will be better within this year. In that case, the increase of Chinese outbound investment will be higher than 3.3%. That's number two, the second reason and observation. The third reason and observation is you see that nowadays the commodity price, the US dollar, and also the monetary policy, the copper nowadays you can see is a new high in last 10 years. And also even the other commodity based metals related alumina, lead and zinc, even oil and gas, oil getting higher and higher, much higher than whatever 20. Nowadays get around 60. So, and the gold still above 1500. So the higher commodity price will encourage the investment, especially in the resources, in the mining area. So that's my answer. So getting back to the point, the appetite of outbound investment still strong. Thank you.
Great. And maybe Jiawen, I don't know if you want to touch on this as well. Maybe you can share a little bit about you and your role and where and Pengxin and what you guys are looking at. Also, kind of the outlook that the company kind of is seeing as well.
Okay, so first, thank you, Amy. I think so. Here we all agree to what Fang has talked before. So as for us, we are a copper and gold mining company. So our main operation is based in Africa. During last year, since the pandemic outbreak, our operation has been so basically the African operation has been timely interrupted. But as of so far, everything is the operations back to normal. So back to your question, as for the coming M&A sentiment. I will say that we had our discussion with One-to-One Mining, I think mid last year. So since that time, the market has been very positive about the sentiment. After that, the market has been more strengthened. So this sentiment, we think is much more strengthened, especially now the market all agree it's a super cycle come for the commodity. So we will assume this will so these trends will last for at least for the coming decades. So more to say that this year is a kickoff year of China's 14th five-year plan, and for our new 5-year plan, so that China will from top to down, there will be a policy-driven new development trends. So we all think this will also be beneficial for the mining industry development. Yeah.
Okay, great. And Greg, what sort of position are you coming at this from?
Thank you. It's my honor to to have this chance also to communicate with everybody here. And Hanqing, you know that we are about 30 years of mining company, and we started with iron ores, and we have expanded to gold and nickel, and also some other minerals. And of course, in addition to the mining, we also have started some high-tech industries, including the MEMS, chips. So that's is still under construction. And yeah, with regard to the question of the outbound investment appetite of the Chinese companies, I would say that George and Jiawen has answered very well. And I just added a few notes here. I think that it's no question that COVID-19 pandemic has slowed down the Chinese investment pace in the global mining in projects investments, particularly since last year. But it can never diminish the appetite of the Chinese acquisitions of the mining assets. And in the past couple of years, many of the major players have been very active and aggressive in project acquisitions. Of course, big names like Zhejiang, Shandong Gold, and of course, including Huayou too. And I think in particular, I think some major SOEs who have not been active in project searching overseas have started, very seriously looking into opportunities in the global mining assets, such as Zhejiang and China Gold. So I still believe that gold is still the first metal that most companies are most, interested in. I would also like to predict that the Chinese investment activities overseas will accelerate, after this pandemic effect is diminished. Mm-hmm. I think this could happen as soon as early next year. Thank you.
Thank you, Greg. And last but not least, coming at it from a slightly different perspective, we have Clyde. Really kind of interested to hear your analysis, what sort of trends you're seeing as well.
As an analyst, I tend to look at the trends. So when I'm looking at Chinese outbound investment, what I'm looking at is two kind of things: is where are they putting the money? What are they wanting to buy with the money? What type of investment is it? I think there's two key strands. Firstly, it is a very positive picture. I mean, the fact that Chinese outbound investment actually went up in 2020 is something it's quite amazing. I mean, this was one of the worst years the world economy has seen. Even the Chinese economy took a tremendous hit in the first quarter of the year. So the fact that there was still an appetite and money available to invest overseas is in itself remarkable. But there's two sort of strands to Chinese investment in the commodity sphere at any rate. The first is acquiring assets for things that they think they're going to need in the future, that they might be short of, that they want to have some kind of stake in. And the second is where they export expertise and equipment and the sort of ability to sort of build bridges with neighboring countries, the so-called Belt and Road type investments. Now, the first investment category where they're looking for things they need, I think what we're seeing is quite a bit of interest in diversifying supply. It's no secret that Beijing and Canberra are not the best of friends at the moment, despite a very strong trade relationship between them. Now, while the Chinese have cut back on the Australian imports of coal and barley and wine and lobsters and a few other things, it's interesting to note they haven't touched iron ore at all, because that's the one thing that China is actually completely really dependent upon Australia for. It gets something like 2/3 of its iron ore from Australia. But it's also interesting to note that it was actually a Chinese consortium that got the right to develop the next big iron ore project, the Simandou venture in Guinea. Now, a lot of people have had a go at this, including Rio Tinto, including Fortescue, and it looks like it's now effectively a Chinese project. And if that gets going, and we're not there yet, but that is a sign that they wish to diversify supply away from the major suppliers that exist in the world today, namely Australia and to a lesser extent Brazil. So I'm looking at that. You also see that in sort of there's been quite a lot of Chinese investment into nickel projects in Indonesia. Again, that's partly driven by the Indonesian government wanting beneficiation to happen domestically, but it's also driven by the fact that China needs nickel, and if you want to get involved in that market, it's a good idea to go and see if you can develop projects in Indonesia, make the local government happy, and you also get the product at the end. So I think there's that sort of thing. Where there's slightly more question marks is the sort of outbound investment that involves them building things in other countries, such as coal-fired power plants in Pakistan and Bangladesh. particularly the coal thing might be, a little bit of problematic given the increasing focus in the world and indeed in China itself on cleaner energy. And it seems that Pakistan and Bangladesh are starting to back away from all this coal-fired power. That in itself, it might mean that might be bad news for companies that make coal-fired power plants, but it also could be very good news for other types of Chinese companies, those that are involved in renewable energy. I mean, some of the biggest solar panel makers in the world are Chinese. So what we're actually seeing, I might see a rotation in what they're actually investing to build in, but I think the key is that there's definitely a lot of appetite to look at diversifying supply in what I might call strategic commodities, iron ore, nickel, copper, cobalt, lithium, those sort of things. And at the same time, they're still quite interested in developing the so-called Belt and Road type projects.
Absolutely. And so you started to touch on kind of the energy transition and the current trend towards decarbonization. Looking at decarbonization and the growing focus on ESG, is that kind of impacting what you're seeing in the market, the way that people are investing, the types of commodities? I know some of you, actually all of you, are kind of focused on some of these EV metals. And so kind of how do you see that trend of decarbonization and energy transition impacting how, your investments and how you're doing business? Maybe George?
Yes, thank you. So that's actually the decarbonization, and even we say carbon free, have a lot of influence in our life and industry, especially for the investment. That's because our investment activity is for the future of the future of the industry and life. What we investment today, the future industry and life will be looks like. So, in China, our chairman, Mr. Xi Jinping, tell us our target is 2060 of carbon neutralization. It means a lot. Let me just say from this year, even from before, we need to try very hard to change our energy structure, to change our concept and idea, how to structure, how to do our investment, and how to make a new industry moving forward to carbon free. We do try our best to be carbon free, and then we can be reach the goal of 2060 carbon neutralization. That's number one. Number two, as I mentioned, Huayou is EV metals resources development, and also EV materials producer and supplier. To be narrowed down, actually, what Huayou really do is lithium battery materials, for example, cathode material and precathode. So for to be the supply raw material of a battery plant, that battery can be two end user. One is electronic vehicle, another one is 3C products, like a computer and cell phone, like this one. In that case, the end user, for example, electronic vehicle producer, battery producer, they have a high standard of decarbonization. For example, when we use power, we will chasing for new energy power, clean energy power from the hydro, from the wind, from the solar, instead of almost we say, if we got some power from the coal, we will say no. So, and also this is for the energy, with the energy, the structure, energy consuming in our industry, especially for Huayou, we need to fundamentally change. Not only we're chasing the availability and cost, but also fundamentally should be new energy. That's why we say influence a lot because of the requirement of the industry. That's number 2. Number 3, for the ESG. ESG is not only today, but also during the past years. I believe Pengxin and Greg, you'll do the same. For ESG, it's what Chinese company, we put a lot of efforts to change our image, to improve our performance in the ESG side. In China, we talk about sustainable development. In the world, we talk about clean mining, green mining. Anyway, it's Chinese English. I believe Amy and Celine, you understand the meaning. So in that case, we pay a lot of efforts, not only in the environmental side, but also in the social side. We talk about social responsibility, and we talk about right governance. So in ESG side, for example, Huayou, we have mining operation in DRC. We have a mining and smelting operation in Indonesia. We have our footprint in Europe. In that case, so we pay a lot of efforts in the social and governance, not only environmental. For example, originally in DRC, we are doing a responsible cobalt supply alliance. Huayou is one of the major sponsors. And in Indonesia, we fully compliance with ESG international standardized. Even we ask ourselves more strictly, as our friend Greg will have an operation and mining in Indonesia as well. So that's number 3. We believe ESG, not today, during the past years, even in the future, is very important. Very important in our mining operation and in our EV industry, battery material production industry, very important. Thank you.
Great. And does one of our other kind of corporate panelists want to jump in with kind of their thoughts on what you're doing on the decarbonization and ESG front?
Perhaps I will add something here. So as George has already mentioned, as these mining companies has already expressed progress to their ESG strategies, so the industry will continue moving towards a climate smart mining way in order to cut the carbon and material footprint. So besides this, I think renewable energy development is also is a way that will able to help the mining operations to be more efficient, especially in the areas like African. So we operate in we operate in South Africa, which is a place that the power supply is not very stable sometimes. So what we are looking right now is also in one way it's a sustainable way, in another way this will better for our operation to use these renewable technologies to reduce our reliance on the local grape. So like South African, as that is currently experience some energy crisis, so your renewable energies will definitely could be used to make the operations more efficient. Back to you, Amy.
Great, thank you. And Greg, what are you seeing on both the decarbonization as well as the ESG side? What are you guys focusing on?
Yes, thank you. I think that ESG is almost becoming a common, recognition is crucially, importance for the modern companies, particularly for the long-term goals to be achieved. So performing the as a standard of the ESG has been at least for last 10 years for Pengxin. Excuse me. I'm very interested in that. Yesterday, I just read the news about a potential 40% cut in the crude steel production in Thomson, and particularly, I think Thompson's Environmental Bureau said in its official WeChat channel that it is planning a pilot plant aimed at reducing steel's carbon emissions by 40% of this year. So that target really very ambitious, but I think would inevitably require steel production cuts. So that's my understanding, because if one cut 40% of carbon emission from steels, I think you have to cut a very significant amount of proportions of steel production. So that's of course just from local government. So this but I still believe that it could be a driver to a structural improvements in steel prices and margins. Very similar to that in during the China's supply side reforms in about 3 years ago. So with the 2 sessions conventions coming, probably starting today, I think we should get more clarity on the central government policies in the coming days. And also, just another note, I just also read that Source 32, OZ Minerals, and like RGO, and among many other China, as mining companies that have initiated the electric mine consortium, to reduce the scope 1 and 2 the carbon emissions in the mining operations. Thank you.
Okay, thank you. And Clyde, I don't know if you want to go any deeper in what you're seeing on this side.
Just a couple of brief points to make. Is the way I look at it is there's a sort of a new scramble going on in the world. If you actually look at what is required to decarbonize the globe by 2050, you're looking at massive amounts of copper, nickel, manganese, cobalt, lithium, all these things that are components, even steel, for the renewable energy technologies, the batteries that we'll need, that sort of thing. At the moment, the world doesn't produce near enough of that. Now, we can get along for the next few years, but thereafter, there's actually going to have to be quite a lot of investment sinking into these sort of things. The problem is, and as a lot of the new resources are located in what one might term the less desirable jurisdictions around the world. I'm talking a lot of places in Africa, some in Central Asia, countries with weak governance, weak institutions. Now, you're going to find that your Western mining companies, your BHPs, your Rios, etc., are going to have struggles to pursue opportunities in countries like that. One, their shareholders don't like it. The risks for them are just too high. They'd rather play in their existing jurisdictions, which are relatively safe: Australia, Canada, the US, that sort of thing. The Chinese, on the other hand, they might be prepared to put up a bit more risk. They have a bigger risk appetite because they're quite prepared for the risk in order to get the rewards that will come. I think the challenge for anybody investing in those countries, and George would know about this, is doing business in places like the DRC is not easy. I used to be based in Africa, and I traveled extensively around the place. And it is it's a fascinating continent, and it's full of possibilities, but it's not an easy place to do business. So for me, the struggle is sort of reconciling, your need to be a responsible, ethical investor and miner with the fact that you have to deal with some interesting situations, shall we say, in order to get your projects up and running in those countries. And I think that's the main sort of challenge in this area. But there is no doubt that someone is going to have to do business in these places because that's where the resources are, and they are going to be needed.
Absolutely. I don't know if any of our panelists want to talk, a little bit more about that, looking at kind of risk appetite and working in difficult jurisdictions? Like, how do you weigh out the benefits and the opportunities? George, do you have any thoughts?
Okay, sure. Actually, nowadays, this the industry, because of the industry reason, mining is not an easy business. You see today, I was wearing a jacket, have a tie. Actually, when I'm working, it's not. So, especially China, we have a long history of mining industry, but during the last 200 years, China get behind some countries. We are the first comer of mining industry, but we are the later comer of the mining industry as well. So when we come, for example, when we start doing mining investment, when I'm working in China Minmetals, that's at the beginning of 2000. When we see globally, where is the mining resources, where is the good resources, where is a nice project, almost setting down. So if we really want to have something, if we really want to find something interesting, we will see all the technically good project is not in a particularly nice place. That's one problem we face. For example, when we do the investment in China Minmetals, we go to South America. When I'm working in Zhejiang mining, we go to DRC, we go to Central Asia, Kazakhstan, Kazakhstan, and Kyrgyzstan. So for these countries, why we go to that way? That's because, as I mentioned, we need to find some project, firstly, technically good project. And then we say, okay, how to be economically good project. That's getting back to your question, how to work in that area. So if getting back to our old days, what we did, actually quite simple. How much simple? We working together with local community. We're working together with local government to have economically or legally or some other kind of socially joint venture. We ask our colleagues means the local people, local government, let's have efforts together, make the best efforts together to chasing for the better life of your family, your kids, and your grandpa. In that case, in one hand, we respect local laws and regulations. Second, we learn from advanced international mining practice, for example, ESG. We need to pay a lot of attention to ESG. At the same time, we're working together for our own life. We put all the guys' interests, political interests, economic interests, life interests together to working together. That's why I say simple, but actually it's not easy. That's because different guys have a different cultural background. Even they see the same photo, they have a different idea. For example, we say when the spring comes, in the eyes of sheep, that's green face, that's green grass. In the lady's eyes, that's flower. But in the man's eyes, that's hope of the this year, that's working even harder. So actually it's not easy. So we'll do whatever we can do. So far, whatever China Minmetals, Zhejiang Mining, even with Huayou, we are in a good shape to have to follow the concept of the same destiny of the same group. We chasing for the best economic and political return for all the people related, we call stakeholder. Thank you.
Great. Very inspiring. Greg or Jiawen, I don't know if you guys want to touch on this same kind of topic of looking at different jurisdictions of where you do business, where you invest, and the risk appetite.
So so what George has just said has reminded me of a saying that recently goes viral on the net. So it's saying that so it's because of the Chinese people's natural background. It make us the suitable people to do the mining business. So I think as George has already described the history that he had experienced in the past. Mm-hmm. So I will say the Chinese company is very bullish in this Southeast Asia and also Africa. Like us, we have entered into Africa for around a decade already. And so we grew our business there, and we will still strengthen our presence in Africa. We believe that where is risk, there is an opportunity, that we will find our way to handle it. Thank you, Amy.
Great. And Greg, what about you?
Yeah, mining business has never been, busy anywhere, anytime. It's always very complex business. So there's many dimensional, factors, you have to evaluate, you have to cope with. So it's extremely complex. But, I think we have to work with some kind of structured methodologies, particularly investing overseas, outside of China. You are going to a new, place, a new region, a new culture, a new, legal environment. So, I think you have to, structure, disciplined, kind of approach. So, for example, for Hanking, we basically, classify, some kind of, criteria, into two categories. For example, we define as the necessary, condition and sufficient conditions. So necessary condition is kind of, screening boundaries for any regions we are considering to, and sufficient conditions to that's really satisfy our target in terms of the acquisitions or investments. So in general, necessary conditions, for example, including the following few. It must be relatively stable in the jurisdictional systems. It is free of geopolitical conflicts or tensions. And also, of course, it must be an elephant country, because you are hunting elephant, must be from the elephant country. So that's basically necessary conditions.
I guess looking forward, where do you see any supply gaps coming from, especially with current diplomatic relations with Australia and other countries? Where do you see China's supply needs growing, and where do you see kind of investment heading as we move forward? Maybe Clyde, if you want to kick us off there.
Yeah, thanks, Amy. To me, I view the whole China-Australia dispute as somewhat unfortunate. I think it's got out of hand. I think a more mature approach by leaders in both countries would certainly be helpful. I mean, we have a crazy situation right now that a Chinese coal company in Australia, Yancoal, can't sell its product to its own country, but a iron ore company, CITIC, can do that. It makes no sense. And I think, things need to be resolved. But if they are not going to be resolved, or at least quickly, that gives China certain problems. They've been quite reliant, or not reliant, but Australia has been a major supplier of example, copper ores, alumina for aluminium, things like that. I imagine what we'll start to see is strategic Chinese investment looking at things that they need, such as copper. That's a hard one to get. There's not many great deposits left in the world. And, it's going to be a lot of demand for that particular metal. So I would expect to see a sort of reorientation of where China's looking at investing for the longer term, and definitely a focus on those strategic minerals and the battery minerals as well. And I think that's where I see things going. At the same time, I think the world is retreating from coal, and China will gradually join that retreat as well. So less money going into that type of investment and more into the metals. Great.
And Jiawen, what are your thoughts on that?
So for us to touch a little bit on the China-Australian political distribution. So I think from our side, so personally speaking, our investment is kind of policy driven. So like what happened to the Belt and Road Initiative. So there are some supportive policy from the government, from the local authorities for us if we do this investment in the Belt Road countries. That's also one criteria that when we are screening our targeted investment. So hopefully, it will. So the situation will be softened soon. So as for what are we looking right now? So definitely we will stick to our own strategy. We are very bullish on copper and gold as a market do.
Yeah, I do have noticed that the Sino-Australian relationships, has been deteriorated, and in the last few years, and I don't see that any improvements will occur, very quickly, anytime soon. And I do see, I do believe that this worsened relationship has already led to some, trade conflicts. And for example, China has reduced imports of coals from Australia, and also, instead, China has switched to other sources, for example, Indonesia and Russia. But I do believe that, this bilateral tensions, will surely impact negatively on the Chinese investments in Australia overall, particularly in those areas with a very political. Highly political, sensitivities. For example, like rare earth metals, some infrastructures, ports, and even energies. But I would not expect though the intensified relationship between the two countries can be repaired. As I said, and which could, this conflict will evolve to impact. Other minerals and mining, activities. Because I do believe that the two countries have very highly dependencies and complementary relationships. For them, the iron ores, that's a hard demand, hard consumption in China. So there's no third sources to quickly replace the sources, from Australia, and including many other, in the minerals. So. I still believe that two countries could be negatively impacted, but the mining investments from Chinese companies is continue to be strong. I wouldn't say it's anything significantly diminished. Thank you.
Great, thank you. And so I guess that was my last question for this panel. So unless anyone has any final closing thoughts, I think we can close it off there. And I want to thank you all for taking part again in this panel discussion for the one-to-one mining investment event. And we hope to see everybody hopefully soon at a live event once we can all start to travel again. So thanks again.
Thank you very much.
Thank you, Amy.
All right, thank you.
Thank you, Clyde. Thank you, Jiawen and Amy.